China's economy is in flux right now. A turbulent stock market and currency are perhaps sign of a country in transition. For analysis on China's economic slowdown, CCTV's Wang Tongxuan joins us from Beijing. And Tongxuan, China's economy isn't off to the best start in 2016. What's going on and what's the economic outlook?
Well, Anand, there are two things we need to understand really. One is the long-term structural reform policy the government has implemented, which is to change its old model for growth based on investment and export into a consumption-led one. Another issue is a short-term cycle in 2016 around this trend. Bearing in mind that the global financial crisis in 2008 badly affected two of China's major trading partners, the United States and the United Union. That means the demand for China's goods and services has been declining. In other words, investment in this sector has become less attractive. So when a strong international demand isn't there, the domestic market has to fill the gap and create that demand. Prices has to go down. And now it comes to the short-term issues. The weak stock market and the depreciation of yuan top investors' concerns. The stock market has already fallen about 20% since the start of this year. Many believe that is due to the fall in manufacturing activity, which in turn can be attributed to weak new orders, exports, and production activities. And businesses in China are clearly focused on reducing overcapacity in many industries. And meanwhile, although a moderate depreciation of yuan, the Chinese currency, might boost exports, a sharp drop in its value could cause capital flight. This would create a self-fulfilling currency crisis and have a negative feedback effect on real economy. So making a smooth transition to a consumption-led economy growth is a big challenge for 2016, Anand.
Right, and in making that transition, what are the specific steps the Chinese are taking to tackle these challenges?
Well, according to the Chinese government, in the years ahead, we can expect to see sustainable growth from innovation and technology. That's really up to the government, which needs to design economic policies that will encourage innovation. For example, finance policies which channel more financial resources into small and medium-sized companies, or more moderate tax cuts, which can help companies innovate and pursue long-term goals which sustain economic spending. And as Chinese Premier Li Keqiang has said many times in this year already, a strong effort will be made to advance structural reform. Those efforts include an innovation-driven development strategy and promoting mass entrepreneurship. Worth mentioning that China has a population of 1.3 billion, a 900 million strong workforce, and 150 million skilled professionals. The Chinese Premier also said the economy growth will depend less on natural resources and more on human resources. And he said he's very confident that China has the capacity to maintain a medium to high growth and achieve medium to high levels of development. And that will certainly give a boost to the global economy, Anand.
Thanks, Tongxuan. That's CCTV's Wang Tongxuan reporting from Beijing. Joining me now is Jin Keyu, an economics professor at the London School of Economics. Keyu, thanks for joining us.
Thank you.
China's growth rate forecast for 2016 is put at the 6.5 to 7% range. Now, we know that previous growth rates have been much higher. What is responsible for the current slowdown?
Well, part of it is just simply that the model of growth has changed. So we're transforming from a growth model that relies on industrial goods and manufacturing into something else. Now, that something else is not necessarily consumption, but it should be more based on sustainable growth models, like, based on innovation and efficiency. So right now what we're seeing is reducing excess capacity, and the fact that China is transitioning away from a very easy kind of low-hanging fruit kind of economic growth model to something that relies on better institutions, which is more difficult.
Now, these changes that you talk about, some analysts refer to it as the new normal. This new normal, is it going to cause instability in the markets, more instability?
Well, first of all, I want to question whether there really is a new normal or not. I think the problem is that the hard work has just begun. It's not that China's growth potential is over, or that it has to be shifted to something completely different, or that we're entering a so-called middle income trap. It's just that relying simply, the growth on subsidizing firms, subsidizing exports, preferential tax treatments, cheap labor, cheap, capital for state-owned enterprises, that cannot be sustained. So what I think is really going on is that the hard part, which is to reform politically in order to push through the economic reforms, is just becoming more difficult. That's why we're seeing slowing growth. Now, is that going to cause instability in the markets? A lot has to do with how the government communicates with the market and the perception. I think in China and elsewhere, there's a general anxiety about where China is going, and that kind of market sentiment is causing more volatility than the actual economic fundamentals itself.
How does the Chinese currency, the renminbi, how does that factor into the changes we are talking about right now? I mean, will it depreciate? Could we see a large devaluation? And how would that affect the country's desire to become part of the IMF's strategic drawing rights basket?
Well, opening up is very much part of China's reform program. Indeed, it's one of the most important ones going forward. So exchange rate volatility, whether you like it or not, is just a fact of life, as well as other kinds of financial volatility, which China was able to be shielded from for a long period of time. But as China opens its doors, it's just going to have to see a lot of volatility. Now, with the depreciating currency, I think it has a lot to do recently with the market sentiments. Again, the stock market crash, a lot of anxiety on the part of the Chinese consumers who are eager to take their money out because they're just simply not sure about the growth prospects and about what the government is going to do. But taking a step back, one has to realize that the real exchange rate does revert to some equilibrium value. We always see that in the data after a while. So I think in the long run, China's exchange rate is not overvalued. In some sense, if its growth potential is realized, Chinese currency should still appreciate. So I want to make the distinction between short-term and long-term movements in the exchange rate. I think short-term, because of sentiment, because of the general economic condition, because of the external conditions, such as the U.S. Fed tightening, we are likely going to see capital outflows. But if China also opens its doors in terms of inflows, we might as well see also an appreciation sometime in the medium run as well.
What about consumer confidence in China? Do consumers think that business conditions will improve in 2016?
Well, I think there are many different layers. Now, one of my worries about the Chinese economy is that the private firms or the private companies are finding a really, really hard time to compete with state-owned enterprises who, again, has these, access to capital, ease of access to capital and preferential treatments, and they're big monopolies. So the economic conditions or the survival conditions of private firms are difficult. Many of these firms, worryingly enough, are turning to investing in the stock market and the property market rather than focusing on their core businesses, which means that their general competitiveness will be eroding. So on that, I am slightly concerned. And I think that consumer confidence, well, it's also weak at the moment. Now, whether the Chinese consumers will still pick up in terms of consumption, that's a completely different issue. But for now, the market sentiment is very much worrying, and also social instability, which is a very important part of the government's concern, is also a potential threat.
Well, let's look at one other aspect of the Chinese economy, one other sector, and that is Chinese internet companies. How will they perform in the year ahead? Is this going to be a bright spot?
Oh, I think so. Absolutely. I think the consumer/service industries will flourish. As we've seen in the past experience, when the Chinese government decide to liberalize a sector or allow the private companies to compete fairly, these sectors do extremely well. Now, the Chinese government, along with this opening up and reform program, is not going to liberalize certain sectors, which they call the artery of the Chinese economy, which includes the finance and banking industry, but they will liberalize the downstream sectors, especially the consumer-oriented sectors. And internet companies in China are doing amazingly well. They have very large domestic market. They can locally adapt, and technological innovation, R&D, etc., will help push these firms along.